Hi. Let's learn about green funds today. A green fund is a mutual fund or another investment vehicle that will only invest in companies that are deemed socially conscious or directly promote environmental responsibility. For example, a green fund might invest in companies engaged in environmentally supportive businesses, such as alternative energy, green transport, water and waste management, and sustainable living. Green funds are investment funds that largely base their portfolio on environmental, social, and governance criteria. Some characteristics of green funds' investment strategy include investment based on performance and a proactive step toward environmental consciousness. Green investing began in earnest in the 1990s after environmental disasters like the Exxon Valdez oil spill gained worldwide attention. Investors began to focus their attention and resources on businesses better at managing their environmental impact, leading to increased investment in environmentally responsible technologies and businesses. Green funds invest in renewable energy, building and efficiency sectors, with a broad focus on solar energy, wind, battery and energy storage technologies, and materials that make these technologies possible. They also invest in builders that use energy-efficient materials, which can reduce a building's carbon footprint. Green funds have seen an increase in investment as investors seek socially responsible investments and returns from the uptick in green technologies like wind and solar power. Despite sometimes high fees, these funds have garnered relatively solid performance, with sustainable funds outperforming conventional funds in some cases. Some studies have found that funds with ESG criteria are competitive with the returns of more traditional funds, delivering an average annual return of 6.9%. However, profit is not the only goal of green investing. Estimates of the total portfolio value of green funds vary widely, but according to the Forum for Sustainable and Responsible Investment, there were $3.1 trillion in assets managed by registered investment companies with ESG criteria, such as mutual funds and index funds, in 2020. Broadly speaking, green funds seek to invest in businesses with positive environmental impacts. Some green funds create portfolios of companies that do not rely on fossil fuels, deforestation, or other unsustainable business activities, while others actively support companies engaged in new energy research, sustainable materials, or other technologies with environmental benefits. Here are 4 key takeaways. 1. Green funds are mutual funds or other types of investment vehicles that promote socially and environmentally conscious policies and business practices. 2. Green funds might invest in companies engaged in green transportation, alternative energy, and sustainable living. Green investing began in earnest in the 1990s after environmental disasters like the Exxon Valdez oil spill gained worldwide attention. 3. $3.1 trillion in assets were managed by registered investment companies with ESG criteria in 2020, and there is some evidence that green funds can match the profits of traditional funds. 4. Estimates of the total portfolio value of green funds vary widely, but green funds seek to invest in businesses with positive environmental impacts. Hope this would help. Thanks for watching.